Nigeria has been said to have exited recession. Its gross domestic product grew by 0.11% year-on-year in real terms in the fourth quarter of 2020, representing the first positive quarterly growth in the last 3 quarters. Meanwhile, despite wobbling out of recession, Nigeria's headline inflation rose to 16.47% in January 2021, while food inflation also rose to 20.57% from 19.56% in December. Joining us to discuss this and other economic matters around Nigeria is an economist, Dr. Boniface Chizea. Good to have you on the morning show.
Much nice to be with you.
Well, as you heard in my introduction, Nigeria's economy unexpectedly came out of a recession in the fourth quarter. Well, according to the National Bureau of Statistics, this was largely driven by the positive growth recorded in the information and communications sector and agriculture. Well, for the benefit of our viewers, what does this surprise rebound mean for Africa's largest economy?
Well, I think that it's a welcome development. Most of us never expected this to happen. I remember that during the year, when the Minister of Finance did indicate that Nigeria was poised to exit the recession by the end of the year, most of us shouted blue murder. We did say that wasn't possible because most of us were focused on growth that is positive. But of course, the economy grew in the third term, of course, was still within negative territory. And so once it's a growth, it's grown. And so in the fourth quarter, we've been told that it grew by 0.11% of GDP. So technically, that means that the economy has grown in 2 consecutive terms, and that's the definition of exiting recession. So I think that technically with the exit recession, we are in celebratory mood. But of course, I would expect that if you say to the man on the street, he's going to tell you that he has not felt it. It's going to take some time, before it take hold and effect will be felt. And the fact that we celebrate the fact that we are in the right direction, and we hope that with a bit of luck we would make progress and we'll see the light at the end of the tunnel.
Indeed, I mean you've already touched on this before. You said that it's a welcome development, but it's not. I mean, not many people are cracking out the champagne bottles because when you look at the numbers and put them in context, we know that 2020 as a whole, if we look at the full year numbers, the Nigerian economy actually did contract by 1.92%. In fact, that is the biggest contraction since 1991. In addition to that, when we look at the unemployment rate, the poverty rate, as well as the erosion of wealth statistics, we know that Nigeria actually isn't in a good place. And as you said, the man on the street probably won't be able to feel the benefits of Nigeria creeping out of a recession. So, I mean, this obviously isn't a cause for celebration. When do you think people should really start celebrating?
Well, I think that first of all, we should be thankful for little messes. It's not easy to get into a recession. What is very important about this is that if you look at the environment, you look at the pandemic environment and what has happened, the fact that the economy ground to a halt. And so it's a bit of miracle that this is happening. Nigeria were a bit lucky. In 2016, when we got to the last session, we spent about 6 quarters, before we exited, and that's fast. And so for us, to be exiting after just two quarters, of being in recession started. We got the pandemic started, and then the first quarter report we got, showed that we had a contraction. So we had it for 2 terms. And then by the third term, we were already having positive development. And so by the end of the year, we had exited. So I think it's a wonderful development. It's not easy to find in most economies that people exit recession in double quick time like we've done. And that's what is referred to as a V-shaped recession. But of course, it's V-shaped. The thing that we're not so sure about is really what's going to happen to growth in the economy. The prospects are certainly not rosy. If you look at all the sectors, it's only the oil market that will seem to be picking up a bit. The oil market has gone up to about $65 a barrel. At some point in time, it was at about 25. So I think that that's the only growth area. Government is fiscal sustainability. We are challenged. We are borrowing all over the place. So you don't have income. The exchange rate it's in trouble. It's on the tailspin and so on. And so these are challenges. So I think that we just celebrate the fact that this is happening, and that we hope that it will look better going forward. But what we have to question is that people have to be very patient, in the sense that it will take a long time, like you just said, before it will be felt at the level of the individual. Because even after many quarters from now, there will still be some sectors that will still be in recession. So if you're operating in that sector, for instance, manufacturing, industry, and so on and so forth, the real sector, if you're manufacturing there, you're operating there, then you probably would or have some issues. So if they're telling you, look, Nigerian economy has gone out of recession, you'll be saying, look, I've not felt it. And so it will take some time before it's felt at a level of an individual. But we have to plead caution and patience and say that, this is celebratory, it's a movement in the right direction, and that it means that if we continue with our policies, it means we've done the right things for this to be happening. If we continue with our policies, then it will probably, we'll probably be leapfrogging, as we move on.
Like you said, it's a gradual process. With the easing of the OPEC production costs and higher oil prices, the recovery is expected to continue. But there are certain risk factors which may send us back to recession, the recurring waves of the virus infection, the COVID-19, maybe Naira devaluation, high inflation, and other things, foreign exchange shortages. Now, what is the way forward to maintain this trajectory for us not to, bounce back into recession?
Well, I think that it's important, and it's good also that development with the virus, the COVID-19, the vaccine obviously is beginning to work. And so we'd expect that the vaccine will get to other parts of the world. In America, they seem to have done pretty well. And so, from reports reaching us, this did indicate that about 50 million Americans have been vaccinated. And the expectation is that by the middle of the year, most Americans will have been covered. And if you tracked the number of deaths, around from this pandemic, you can see that there's a substantial drop-off. And so you need to, as soon as we can get the pandemic under control, then we can resume, get sectors of the economy, to begin to produce. And once we begin to do this, then we'll begin to reclaim our life, as it were, from the pandemic. And then we'll begin to get back to familiar territory. And then we expect that, there will then be, if you like, we'll be in a comfort zone, and we should then be able to, manage the economy better than what it has been so far. What has happened so far is that we've tried to reflate the economy. So the economy is ground to a halt. People are out of work. Sectors are not functioning. And then we're just pushing in palliatives. And pushing in palliatives, you're just pushing money into the system. And so little wonder that the rate of inflation is on the rise. It's been on the rise since 2020, June 2020, and it's maintained that upward trajectory. Like you did announce in your opening comments, inflation is now at 16.4, is it 47%, and that's pretty high. If you put that vis-a-vis a target of monetary authorities that say they want a inflation rate of between 6 and 9%, you can see that we still have our jobs cut out in this regard.
Exactly. I mean, that's 6 to 9%. We've been outside of that for more than 5 years. So you can imagine, as you've said, there's definitely a lot of work to be done to bring us under double-digit inflation. I guess in addition to that, I guess to build up on that, I'd ask you about whether you think the MPC will increase interest rates because of what we're seeing in terms of the numbers coming out of Q4 of 2020. Do you think that will happen? As you're well aware, the MPC did in fact lower interest rates by around 200 basis points last year. So how do you think the committee will look to doing the same this year? Well,
I expect that the Monetary Policy Committee should be able to, maybe at their next meeting, what's happening now is that interest rate is almost 1%. And so, and that should be expected. So you have a pandemic and you're trying to reflate the economy. And so you don't want people leaving their money in their accounts. You want people to put their money out there. So you pay them next to nothing in interest rates. But as we begin to, gather some momentum and begin to produce, then there'll be a need for us to make sure that these monies, that more money that you make interest rates, people are encouraged, because you now begin to focus on inflation. What has happened is that we've not bothered about inflation. We just left inflation and concentrated in trying to get people back to, to work, and then make sure that the social consequences of the pandemic, people not being at work and so on. The person that's not at work is in a devil's workshop. And so, so to make sure that but as soon as we have a move on in the right direction, we expect that interest rates will begin to pick up. We expect that fixed income securities will begin to have some meaning. Now, nobody, if you keep your money on savings account, all you are doing is you want to avoid people getting at your money. If it's in current account, it's easier to get at. Otherwise, you're not getting any money. In fact, what's happening is that you are paying an inflation tax. When you have an inflation rate of about 16.5%, and you're getting interest rate of 1% on your deposit, you are effectively paying an inflation tax of more than 15%. And so, for those who know, it's not the best circumstances for one to be in. But then we expect that this is pandemic, so we expect that going forward, the interest rates as they are today would have to start moving upwards. There's no other way to go. You can't go lower than that.
All right. Well, let's talk about border reopening and its impact on the economy and the nation at large. Last month, the federal government reopened its land borders. What are your expectations?
Well, I expect that the land borders were shut inadvisedly because it wasn't the best thing to do. I know we wanted to protect domestic production. We wanted to boost agriculture, bring in some productivity in that area. But then we probably did that, and we did it for too long. So it was shut down. But then, of course, the reality on ground was that goods were still coming into the country. So the borders are porous and so on. So it wasn't effective. And then ultimately, what has happened was that then it stoked up inflation, rate of inflation. If you look at the analysis coming out of National Bureau of Statistics, and you find that what they say to us that a major cause of inflationary spiral is food inflation. And of course, besides the border, of course, you also have issues with the insurrections, the unrest in the country. So farmers can't go to farm in some parts of the country, particularly in the food basket regions of this country. So you're talking about you go to Benue State and so on, people are not going to farm. So if they don't go to farm, so there will be no production. So if there are no production, so you're going to have scarcity. And to the extent you have scarcity, then prices are going to be high, supply and demand. And really, we have to be careful with this because agriculture is the dominant sector of our economy, not oil. And that's where you have growth, desire in agriculture, vis-a-vis oil, and that's where you have a greater number of people being employed. And they say to us too that when you remove hunger from any problem, then that problem is half solved. So we need to refocus and make sure that we will get our ass right in that respect.
Indeed. I'm actually going to ask you about the positive, if we can even say the positive aspects of economic growth in Nigeria, in the economy, looking at the quarter four 2020. But we are heading quite fast for a break. So I will hold off on asking that question while we go to that break. And when we come back, we will take it from there. Welcome back to the morning show here on Arise News. We're still joined by Dr. Boniface Chizea, who is an economist and financial analyst. Let's go into the quote-unquote good news. We know that the non-oil sector, the non-oil economy rather, expanded by 1.7% from a year earlier, and we know that is the strongest rate in 4 quarters. So, that is a bit of good news. In addition to that, we know that agriculture grew around 3.4% and telecommunications around 17%, just over 17%. So who would you attribute this seemingly good news to? What is this a result of?
Well, I think that it should be obvious. The central bank is playing a key role in this economy, and I think it's better recognized. Of course, it's playing the roles it's expected to play. Well, I think that the governor of central bank, it has passion for his job, and I think that we should commend him. He's all over the place. He's even involved with the private sector, trying to organize them, to also, be involved in trying to find solutions, for the pandemic. And so, if we are talking about really what's happening in the economy and the way forward, I think it should be given considerable accommodation, for the job he's doing. So all the monies, for instance, the fiscal authorities have now just decided to increase our borrowing to GDP. It's between 5%. They've now trying to increase it to 40%. And all this money is coming from central bank. So central bank is putting in this ways and means funding into the economy. Is also there's the other problem, the downside in the fact that when you have so much money within the system and you have an economy that is overly exposed to the external sector, then the pressure on the exchange rate is quite substantial. And so also by battling, so people are complaining about the rate of exchange. It's falling. And there's no magic wand. There's no other way to go, than for the rates to drop. We have to be realistic. And so we are consuming what we don't produce in this economy. So if that is the case, despite central bank's best efforts, so this is still happening. And so we wouldn't expect overnight, for us to see a turnaround. But the central bank has preached consistently that we have to emphasize the non-oil sector. We can't. So part of the problems we have in Nigeria is that we're overly exposed to the oil sector. And so, the simple wisdom is that oil leads us into recession and oil takes us out of recession. And that's not good for a country as big, as a large economy as Nigeria is. Our expectation is that the Dangote refinery, which we expect should come on stream, the 650,000 barrels a day refinery, which we expect should come on stream this year, it might be a game changer. So I know it's operates from an export-free zone, so it's going to sell the products, at international prices and so on. But I would expect that it will not be the same price that you will sell in Nigeria as you will sell in Benin Republic. So think of logistics. So he's a businessman. He's going to recover, the cost of his, taking the products out there, to sell. And so we'd expect that if we have this refinery, and we can begin to remove the shame of a country that is naturally endowed in petroleum products, the sixth world-ranked oil producer in the world, that cannot produce what it consumes. They'll have to go out and import what it consumes. And that creates a lot of problems for us. And so the oil market price is going up. So even price is going up, we celebrate on one hand that is adding to our treasury. But on the other hand, we have issues with the pump price. So, so you start talking about subsidies and so on and so forth. And the authorities have been talking about deregulating the oil market. And nobody seems to have the political will to push this through. So they say they're going to do it, and it's all half-hearted measures. So if you want to deregulate, so you deregulate, and then you let the market, determine the price. You let the major oil producers, import the products. Now, as long as you have NNPC importing the products, you have NNPC trying to access exchange rate at the offshore window and so on and so forth. It's not still market conditions. And so forever, the authorities are involved, in putting subsidy where we should not put subsidy. And we know that if you take the common man on the street, it's not concerned, it doesn't have cars. What percentage of Nigerians have cars? So you are subsidizing those you shouldn't subsidize, in that situation.
In the early part of your answer there, you said that you'd attribute a lot of the success of the non-oil sectors in Nigeria to the efforts of the Central Bank of Nigeria. And I think objectively many people would agree with you. But in addition to that, there's also the fact that many Nigerians of late haven't been quite happy with the Central Bank of Nigeria, most especially with that circular it passed around, which prohibited Nigerian banks to have any type of dealings with cryptocurrency. Surely, do you think that move would hurt the Nigerian economy in the long term? Surely, with that move, it's definitely affected many tech businesses in the country and would have contributed to the unemployment figures. What do you have to say to that? Do you think that move will have a negative effect on the Nigerian economy?
Well, I've listened to comments. I listened to my sister friend, Obi Ezekwesili, and so on. They make comments. They say that central bank should study the thing and so on and so forth. The fact that cryptocurrency is an uncharted territory. It's an area. It's not new. It's been around for quite some time. And it's not just in Nigeria. Central bank cannot go and regulate what he does not understand. Central bank, nobody understands cryptocurrency. So it's a market that, it's growing. I take the point that, that it maybe it's something that in the future, if we don't get serious and try to do something about it, might come to hurt us. And as people have just said, so have our youth, who are now tech savvy, and they're all going into cryptocurrency. Was an area that you would not understand. Nobody understands it. And what happened when Central Bank acted was that we got to intelligence that about $200 to $300 million illegal funds were coming into this economy. And Central Bank will never sit, and we got this information from Federal Bureau of Investigation, FBI. And Federal Bank will not sit down and see such monies, coming into the economy. Here, that such monies are coming into the economy. It will destabilize. We're talking about pandemic. We're talking about palliatives. We're pushing money into the system to make sure that we kickstart sectors of the economy. And then you now sit down and hear that illegal funds are flowing into the economy, and you expect Central Bank to keep quiet and fold its hands. And so Central Bank did the right thing. It's a panic measure, but really it has to do so. I'm glad that IMF has backed Central Bank in this move, in this direction. It's not just Nigeria, it's all over the world. Yes, cryptocurrency, digital currency, might be the currency, of the future. But we are here today. That means we have to be careful. We have to manage the economy today. Before we talk about, if we don't have today, there will be no tomorrow. So it's very important. So I think that what Central Bank did is what, if you are there as governor of Central Bank, that's what you would do. Because you have a crisis on your hands. We were managing the pandemic. We were celebrating the fact that we've exited the recession earlier than most of us thought. And suddenly this is going to happen. And Central Bank's challenge with managing macroeconomic stability. And so you're going to add to that problem by this happening. And so people saying they should study, they've been studying it. Maybe all we have to say is that it's a difficult terrain, it's a difficult area to profile. And so we expect that as we go forward, that we're all in this economy, we're all in it together, and perhaps more light is shed on what is happening there. That's also, like I did say in one of the comments I made, we don't expect that the ban that banks should, not deal with accounts that deal in cryptocurrency. We expect that the way, if the thing is better understood, that Central Bank would also revisit that decision.
All right, we only have about 1 minute to go. I just wanted to just touch on the fact that the federal government had approved restructuring of its debt with the central bank, but we will see an increase in interest rate and all of that good stuff. But I'm not sure if you had answered my question in terms of what areas you think the government can amplify to sustain the growth in trajectory.
There is obvious. I have agriculture. I did say, for instance.
Yes, you did say agriculture, but there are other areas like real estate. But unfortunately, we don't have enough time. Thank you so much. We've thoroughly enjoyed this segment with you.
Thank you.